What if you knew exactly when to invest? Interest rate returns from banks are disappointing these days. And the stock market is a roller coaster ride with no guarantee that you won't lose your shirt. The average investor today is often an unwilling participant in the stock market casino who has no choice but to gamble his IRA or 401k life savings in an incomprehensible and risky trading environment. So, how about an easy-to-execute, high-quality investment strategy that's lesser known and often misunderstood? The best news is that it's easy to use and works well with mutual funds, even inside an IRA or 401k account that may offer you limited investment options. The crux of trading is just moving money to take advantage of the best investments at any given time. That's called market timing. Of course, the way I just explained that makes it sound like the easiest thing in the world. It most certainly is not. But there are successful market timers, lots of them. If you look at Wall Street statistics, you will see that more than half the market today is traded by automated computer signals. You can do that too. No, I'm not saying exactly this, but you can have the next best thing. Wall Street doesn't have all of the world's best mathematicians and statisticians all to themselves. Many other people have worked long and hard at cracking the mathematics of stock market trading. You just need a way to separate the systems that work from the ones that don't. One way is to use a timing system review service like TimerTrack. Trading system developers sign up with TimerTrack to independently evaluate their trading system in real time. The ranking service looks at the trading signals issued by the system as they arrive and gradually builds a chart showing actual verified performance of the system. Here's an example. This chart shows the real-time, independently verified performance of TradeWin, a free market timing system. You can see the performance of the TradeWin system from this line, which can be compared to the performance of the stock market in general, the S&P 500 index, on the bottom. TradeWin, in this verified 5-year performance chart, exceeded the performance of the stock market by over 15 times. A typical stock market timing system will charge a monthly fee. For this fee, you receive membership access to a website and market timing signals that arrive by email. When an email arrives, you simply follow the instructions telling you to either buy or sell. Most of these systems are designed for trading mutual funds. So, acting on the email trading signal, you would simply trade your money from one mutual fund to another. There are always a few stock market timing systems that are free of charge. Instead of a subscriber fee, some of these make money from advertising, mailing list marketing, or from deals with brokerages. An example of a free market timing system is the TradeWin trading system we showed you earlier. Consider a trading system like you would think of a good poker player. Poker is largely a game of chance, but a good player can make an edge for himself and beat the odds over time. You would never judge a poker player on just one game, because there's no way to entirely remove the element of chance from poker. A champion poker player will still lose games, but he will win more than he loses. This is exactly how to approach market timing systems. There are unpredictable market trends and predictable ones. Even invested in a good system, your balance will fluctuate up and down. Over time, however, you should be able to visibly beat the general performance of the market. Now, if you're a casual investor, you don't want to use a timing system that makes hundreds of trades per year. If you trade money inside of a 401k account, you may even be limited to just a few trades per year. Stick to something that performs well without making large numbers of trades. The free trade-when system averages just a couple of trades every year. A very good strategy to reduce volatility is to spread your risk by using several overlapping timing systems, each focused on different investment types. Find a good subscription-based service, for example, and then combine it with trade-when or other free systems. Look at these timing system performance charts. They all show positive trends, but also volatile price movement. When the systems are averaged together, however, a much smoother chart results.